Welcome back. You're watching Stockwatch with me, Julieta Televi, and joining me to take your stock-related questions this evening are David Shapiro from Sasfin Securities and Wayne McCurrie from FNB Wealth and Investments. If you'd like to send questions to us, please email stockwatch@bdtv.co.za or via SMS on 41392. David, Wayne, good evening to you both. Wayne, I shall start with you tonight. It felt like the JSE just kind of wanted any excuse to go up, and we ended very strongly today. It was mainly the gold shares. But what I mean by that is quite a lot of the SA Inc. companies had a decent day, notwithstanding a couple of really not great results. And I'm thinking about Woolies. And I mean, it was down, 5% and it closed 2% higher. It just felt like there was this relentless pressure to bid things up.
Yeah, look, there was strong pressure, obviously, today on the market, and it was mainly the mining shares. And it wasn't just the gold shares. I mean, a lot of the mining shares actually went up. The mining index was up almost 5%. Good couple of the platinum shares went up. Anglo itself went up. This is in anticipation of cutting interest rates, maybe not tonight in America, but certainly, at the next meeting in December. And maybe maybe even quite a dovish outlook statement by the Fed tonight. The market is discounting this virtually 100%, to be honest. And when you look at the rand as well, I mean, it also strengthened quite a bit during the day, I think, on the same sentiment. So that's what drove the market today. And I mean, the all shares at an all-time high. The industrials are virtually at an all-time high. The financials are at an all-time high. But of course, the mining shares are a long way from an all-time high.
Yeah.
So we'll have to see what happens. But certainly, I mean, the market, just anything that was going up, anything went up today. I mean, there were very, very few that actually went down.
David, do you think it's also partly because of the cheapness of local shares that happens? Because if you look at some of the results, I mean, if you looked at the Woolies trading update, it wasn't great. AECI wasn't particularly good, and these all ended, in very respectably ahead.
I think the markets want to go better, as Wayne said. The US markets are just running away. I mean, they're incredibly strong. I didn't sleep last night. I woke up in the middle of the night and stupidly looked at the Microsoft results and saw the shares were down 6%. And I just said, oh, no, do I have to go through this again? I was in such a bad, grumpy mood. And then I wake up this morning and everything's forgiven. It's all running up. And those are markets. And the thing is that it's turned around very strongly, and it's a good turnaround, because where there's been a sell-off and you get these weak, muted kind of dead cat bounces almost, that's not a proper turnaround. But tonight, today it's strong, and it really is. And I'm surprised, because we know that the Fed's going to cut rates in September. It's just everything's pointing. In fact, Krugman and Bill Dudley from the former New York governor have said, do it now, because the employment market is weakening so much. They're scared that it's going to transform into much lower consumer spending on that. So I think there will be this hint, and I think the data is pointing towards that. But it's long may these markets last and pick up, and we were just part of it.
Yeah, it's very interesting and sometimes quite perplexing, the rapidity with which the shift in direction happens. Because last week it found like we were completely becalmed, whereas this week we're off on a tear. There's a question on gold shares actually, and the viewer says, could I have the panel's view on DRD Gold, as it has barely rallied compared to the likes of Pan African Resources or a Harmony? Is this a value investment hiding away or unlikely to rally in the future? And having said that, earlier this year, I think DRD Gold was the best performing gold share on the JSE over a 2 or a 5 year period. But maybe it's sort of stagnated a bit. Wayne, what do you think?
Look, I don't know why it hasn't rallied along with the other gold shares, to be honest. I don't really know. If other shares go up, it should also go up.
David, DRD Gold, do you look at it anymore? It's a tailings company. So
I know the operation well. I've been around a long time, but it's been around twice as long as I have. But
The Roodepoort
Never
rocket.
used to be. I went down DRD. It had what they call a vertical shaft. It was like sitting in the figure of 8 at the Rand show, in one of those things where you hold back like this. But I think you're being unfair on it. It's creeping up nicely. It might not be rising at the kind of pace that other gold shares have, but it's certainly not lagging. And I think as long as this gold price remains where it is, I suppose your danger is the Rand. If the Rand does improve and you don't get a tantamount improvement in the gold price, it just might weigh on them. But I'm with Wayne. I haven't got any great insights into the mine. I would imagine this is coming to the end. I don't know how many tailings they can keep finding, and where this, because when I fly over Joburg, I don't see many tailings left.
No, this is true. I mean, and also, Sibanye has a big portion of DRD gold, so maybe that is also what keeps, to some extent, a cap on any share price exuberance. Okay, talking about exuberance, and this person might have been around in the markets even longer than the two of you, which is saying something. And they say, do David and Wayne remember a long time ago, if you had Grand Bazaar shares, you would have received ShopRite shares for R1. Today, shares 304 Rand. Not a bad return.
I remember Grand Bazaar. Sure. It wasn't the kind of shops we would shop in. In fact, we didn't even shop in ShopRite. It was, that was really like a bazaar. So, credit, when I saw Wayne tweet about ShopRite's results yesterday, and they're superb. It's just crunching everybody. Just wiping out everybody. And if you look at Woolworths results, admittedly, the food side is doing well, but I mean, it's just against Spar and against Pick and Pay. It's just eating their breakfast, lunch, and dinner.
Yeah. Wayne, just on a comment on, if you received a share for R1, you never sold it, it's now 304 Rand. Is that for you demonstrative of the power of investing in equity markets? And I realize saying that it can go entirely the other way. You could have invested in any of the shares in the listings booms over the last few decades, and and they're worthless today. But
look, it actually shows two things. It shows the effect of compounding, but the second thing it shows, you've got to have the right company to compound in.
Yeah, exactly.
But I mean, just on that, if you take a picture of the all-share index going back 25, 30, 40 years ago, and you bought it then, you'd have also made a very, very good return, because it is just compounding.
I don't think his return's been all that smooth. That's
the.
If you look at ShopRite, it was never the ShopRite was never the ShopRite that it is today. I mean, it's gone through lots of ups and downs and all over the place and that. So but he's stuck with it. That's an incredible return. Yeah.
If you've stuck with it, and that's another. Yeah, I mean, there's a few shares, Capitec, Naspers, shares that if you stuck with them, that is also. And then there are shares that you doggedly stick with that then, turn to nothing, like a Brait, for example. So it doesn't, there are examples on both sides of the coin.
Good point.
A viewer sends a question on Nedbank, and he says, can you ask your panel for the 3%, about the 3% rise in Nedbank today, and can you still buy it? Is the PE not too low at 7.6%?
Well, that's why you would buy it.
That's what I'm trying to understand that question.
Look, I mean, all the banks went up. As I said earlier on, the banking index was at a record high, but these shares are still cheaper. I mean, you would think that a big bank, Nedbank, Standard Bank, maybe not ABSA, but Nedbank and Standard Bank are probably over time worth at least a 10 PE. So what you got there, you got 20% upside, 25% upside to get you back to a decent valuation level.
I think, Julieta, that if this continues, if global markets find some kind of support driven by lower rates, we're going to start lowering rates as well. And you get the feel-good factor here. I think Nedbank's at an all-time high now. It has been. It's not the first time it's registered that, but it continues to go. If that's a trend, just go with it. And Wayne's right. I think that I think the first place that people are going to buy in South Africa are going to be the banks, simply because of their history and how well managed they are. Probably a lot safer than some of the resource companies, although resource companies can give you massive returns if they do turn around fast. So this is a reasonably safe area to go into.
Yeah. And if you'd bought in the COVID sell-off, which we've got illustrated on our screen now, in 2020, you'd be really feeling quite chipper.
You'd be smiling, yeah.
Yeah. There's a question on, speaking of, I suppose, income-related instruments, and the viewer says the RSA 10-year government bond yield has declined by about 20 basis points in the last hour of trading, and then increased by the same 20 basis points in the first hour of trading the next day. This has happened consistently for the past 7 trading days. Do your guests know why, and is it a potential kind of arbitrage opportunity? Wayne, that's a bit of a weird thing.
No, look, I don't know why it would go down 20 and up 20. There's no logic behind it. To use it as an arbitrage, you're taking risk at, because it's the same as, sell in May and go away and, avoid October and all of these good things. You go back and you analyze, and I've seen so many of these things. You go back and analyze data and you see these trends and they look so convincing until the day you try and make money out of that trend and it stops working.
Yeah, absolutely. Yeah, this is great. History shows that we get into it. You know how many people have come to us with AI models, that have worked, and they go back test, and it works until you say, okay, we'll support you. Then it never works again.
You only see a back test that works. You don't see the other 500 that don't work.
I mean, I don't even know how you would...
Remember that to everybody. Yeah. When somebody comes and gives you back testing, just run away.
Okay, yes, and if someone came and told you what the future will be, then you'd say, well, okay.
Same thing.
Okay. So, right. So, an interesting, curious little trade that maybe if you're quick enough on the draw, but both of you saying...
Julian, at 20 points is big. In the bond market, at 20 points, because you said yield, you didn't say price.
Yeah, it's yield.
It says yield. For a that's huge. That's why I'm saying I don't follow it that closely. I go through the yields every day and measure how we've done, but I haven't picked that up. But I'm not sure where where he is picking that up for, because it's very difficult to actually get hold of the trading stats, on that kind of basis. You've got to be a bond trader yourself, I think. So I'm not sure where this is coming from. I'm not questioning that he's not doing it, but it's very hard to actually get those stats.
It might be worth having a chat with any bond traders that one knows, just to see maybe what's going on there. There was a question on Argent, which I know is, but it's actually had a phenomenal performance on the share on the JSE over the last year. And the question is, the panel's view on it on the back of its recent rally, is a potential UK listing on the cards, or is it now a fairly valued company on the JSE, possibly having been undervalued beforehand?
It's still so small. I can't see a UK listing really helping it in any way. I don't think it's got a market value of more than a billion, rand. I think it's very small, but it's done very well. In fact, it's got a lot of operations. When you see and all over, I think more than 50% comes out of from the UK or from outside of South Africa. But I must admit, the recent operations or the recent results were very encouraging. But it's been around for some years now and still remains quite small. But it's in steel fabrication, steel manufacturing, I think those kind of things. I just remember it from Jetmaster. If you had a Jetmaster in your home in those days when you were allowed to build, burn coal and keep you warm by that. But it's okay. It's done very well.
The person who I know covers it quite closely is Anthony Clark from Small Talk Daily. So
would be one of his.
So he'll have written on it, and if you can get your hands on.
You can't get the shares. That's the only problem. One of the issues with some of these really good small caps is that if you want to take a big bite, you just can't get the shares. So you've got to take little, small bites, etc., and it doesn't really add up to much. So that's the only danger with trying to by these companies.
Yeah. Wayne, anything further to add on Argent?
Now, David knows the share far better than what I do.
Okay. What about Datatec? And the viewer says Datatec has a NAV, net asset value, of approximately 68 Rand, yet is hovering around 36 or 37 Rand a share. Any comment from your panel?
Ask Wayne, because you've got to then question the NAV.
Excuse me.
You know?
Look, when you do, and this is not discussing Datatec per se, when you look at a company, you look at many things. And one of the things you look at is the net asset value. But understand, you can have a net asset value. If you don't get a decent return on that net asset value, your market cap will be less than the net asset value. So in theory, your net asset value is the value of the business you would get if you had to sell it to someone else who could then possibly get a higher return from that asset base than what you could. So NAV is something to look at, and certainly companies that are at a deep discount to NAV is the automatic choice for value investors to do further investigation into it. But a deep discount to NAV does not guarantee a good share price performance.
I mean,
it's the return on those assets that actually, in other words, the share price is determined by profitability foremost and profitability growth foremost rather than net asset value.
And you value those assets as a function of your return. That's why we're seeing so many impairments now. If you look at Woolworths today on the country road, you know, they have the goodwill in at a certain point. In other words, all they're admitting is we overpaid. You know, we overpaid for it because we're not getting the return on the amount we invested in it. And there have been massive amounts of impairments. And what CEOs are doing, what management is doing, is restating the NAV, bringing it down to levels on which they can make decent returns. It's journal entries. It's a little bit of financial engineering. You know, you're hiding away your mistakes of the past.
Yeah, a bit of sleight of hand.
Yeah, but look, I mean, just on that, people always say, "Oh no, it's a book entry. It's a book entry." That money that you paid out was real money.
Yes.
So it's not actually a book entry. It's writing down real money.
Yeah.
No.
But just on Datatec itself, I also feel that Datatec, it's been on the JSE for a very long time, and it sort of feels like a perennial non-starter. Or am I being unfair?
Nah. It is a perennial non-starter. I think they came in with Data in the 90s. They were competing, both Datatec and Data, you know, for first place at a time when that was our first IT boom in the late 80s. You know, these companies came on, and I don't think they've ever captured the imagination since then. You know, Jens Montanana, nothing's happened since then. I don't know. You know, they're box droppers. I don't think they're. I saw Elton's results today. You know, at least they're a function. They do things. I don't know what Datatec does, and it's all over the place. I mean, they function all over the place. You know, you don't see them on the corner or anything, or in Sandton City. You know, I don't know what they do.
Look, I mean, to still be essentially the last survivor from the dot-com boom, you know, it says something.
You know, this is pre.com. This is the 87 one. .com wasn't even thought about it those days.
I suppose it's, I mean, their business model, haven't they always been resellers, and they deal in sort of Cisco and I want to say Oracle, but I'm probably wrong. And they've got big international businesses that, you know, they haven't ever moved into the services business or software as a service or that, and that seems to maybe have been their misstep.
I'm trying to think of some of the other businesses that also had lots of boxes in which there was nothing in. I can't remember those. Memory fails me.
Yes, and also maybe understanding of the IT market fails me. So this is really where I'm on shaky ground.
This is Westcon, the Logicalis.
Yeah.
Yes,
I don't think they promote themselves either. I don't think they do a lot of self-promotion as well. And I think that's why our knowledge is just so weak.
Yeah.
Okay, and then I'm going to ask you about one company, which is, it's probably the first question we've ever received about it, Foresight. And the viewer asks,
I watched Foresight. Oh, yeah.
can the panel please comment on whether Foresight's current share price looks attractive or not to be added to my portfolio?
I have no idea. All I know is that someone in the Crystal Challenge has Foresight. Therefore, I have to put it on my list and I watch it go up and down all the time. But I have no idea because it's
Yes, sight.
Foresight.
So like 91, it's not, I have no idea. I just know that it does exist.
Yeah.
I can't help you on that, no.
It's tiny. I mean, it's got.
Yeah, I know.
Oh, I can't even actually tell you what it is, really. I'm going onto the website now. I'm sorry. I mean, this is as Wayne would say, option money.
It is. But all I know is I've learned a lot about other companies that do exist as well, that I never knew were listed on the JSE.
Isn't Foresight into sort of big data manipulation and coming into your factory and helping you to evaluate, to function better? And aren't they based in Mauritius?
Okay, I know they're based in Mauritius. That's pretty much all I know about them.
But it's been a bit of a disappointment, though.
Okay. All right. I apologize for the rank ignorance displayed by the three of us this evening. So, other than our knowledge of this company's existence, so I do apologize. Okay, perhaps as veterans of the market, you can help this viewer. And he says, I know what letters of allocation are in principle, but what do you actually do to use them, and specifically on easy equity? So this is obviously the trading platform that this person is involved in. They appear in the same way that an ordinary security that you would have bought would, only giving you the option to sell or buy more, but then they expire after a time. Should you just sell them, or how do you convert them to further shares and make use of the discount you've been afforded as a shareholder? There doesn't seem to be any option on the app to do this other than by selling the letters of allocation and then using the cash to buy more shares on the ordinary market. Now, I suppose that is a easy equity specific issue, but can you maybe help us out here?
Yeah. In theory, if you own letters of allocation, you can take up the rights issue shares at the price at the rights issue with however many letters of allocation you've got the shares entitled to that. If it's an easy equities type platform story, you find the share itself would probably trade very close to the rights issue price in any case. So, yeah.
I think
if your platform doesn't allow you to actually take up your rights issue, then you must sell it before they expire.
I think they've been allocated either the pick and pay or Brait letters of allocation. I think that's what the viewer is referring to. So he sees on his account that he's suddenly got these letters of allocation, and he better act, because if you don't act before the expiry date, they expire at zero.
Contact your platform owner and say, I want to take up the shares, and they must be able to do it. They cannot not be able to do it.
Yeah.
Or alternatively, sell those letters.
Yeah, sell the letters, and then the letters plus the money you would have used to buy the shares will more than likely equal what the share price is. So,
okay.
Yeah, I see pick and pay letters are trading at $7.99. I don't know when the expiry date is, and Brait letters are trading at 30 cents.
Okay.
So there is value at the moment.
Yeah.
Of course, if you take it up, you will take it up at the issue price, which I think in pick and pay was $15.86. I'm not quite sure what the price in Brait is.
Okay, all right, but do something. Don't just let those things
do something, because it's worthless.
Yeah. Okay, so very quickly, a minute left between the two of you. Your stock picks. Wayne, what are you going for?
Look, I mean, after what the mining shares did today, I'm going to go for BHP. And the only reason why I'm doing that is that the share price has probably been the worst of all the major mining companies over the last while. So I think it actually does look very, very cheap. And if the mining shares continue to run, and we see what the Fed says tonight, and we see what tomorrow brings, I think this will be one of the better ones.
Okay. And David, how about you?
I'm going for NVIDIA because the bears are being squeezed. And there's nothing that I like is when the bears get squeezed. So, the fundamentals are still great. Morgan Stanley has made it its top pick in the chip sector. And a lot of changes came in the chip sector today. I haven't got time to go through the news. We've got limited time. but Nvidia up 11% at the moment.
11%, yeah.
So I like that. And when the bears get squeezed, they squeal.
Yes,
Yeah.
yes, you can.
Like
It's quite
pigs, yeah.
loud. Yes, yes.
The bears are squealing now like Shapiro was squealing last Wednesday.
I didn't sleep last night, yeah.
Well, I'm glad you might be sleeping better this evening. David, Wayne, we shall leave it there. Thank you very much for joining us. As always, David Shapiro is from Sasfin Securities and Wayne McCurrie is from F&B Wealth and Investments. And up next, we have The Close. Stay with us.